$1 million by 2030, 14 million by 2040, and 40 million by 2050. Q4, we have October, and Q4 is historically the best time for Bitcoin. November is not. And so November is a crapshoot. November is very volatile. I just want people to be aware of that. And then December typically ends pretty high. Metaplanet has announced they're going to start doing it. And Asset also announced they're going to start doing
Stripe.
it. So now,
that's right.
Stripe, yeah. So now there will be 3 companies. There will be. But most other companies are still building. So that's number one. There's a duration mismatch. And what happens is a lot of Bitcoiners got into these things and said, hey, they're supposed to outperform Bitcoin. And I believe they will. I believe they'll at least 2 to 3x Bitcoin. Some good ones should do better than that, but not on a one-for-one daily basis.
Yeah. Bitcoin may be entering its most explosive season yet, but this time powerful macro forces could make the rally look very different. Mark Moss, a well-known investor and market analyst, is drawing attention to the timing of Bitcoin's current move, as the cryptocurrency recently slid to a 3-month low of $102,500. He notes that Bitcoin historically follows a 4-year cycle but stresses that it's closely tied to global liquidity trends rather than just its halving schedule. This period often precedes a parabolic rally before a blow-off top. Moss also points out the seasonal pattern of weaker summer activity followed by strength in the final quarter of the year. Historically, October has been Bitcoin's best month, while November remains volatile and December tends to finish strong. Institutional interest continues to grow, with JP Morgan Chase and Company recently highlighting Bitcoin and gold as key hedges in its debasement trade, signaling their role as risk-off assets in an era of relentless currency printing. Moss underscores the potential for Bitcoin to eventually surpass gold's $21 trillion market value, suggesting room for a 10x rally. However, he warns that the current reverse crash environment where asset prices rise but purchasing power declines requires careful positioning. And while Q4 historically favors Bitcoin, ongoing tariffs and trade tensions could inject short-term volatility into what has traditionally been the market's strongest season. Get ready for crypto's next big shift. Subscribe now and turn on notifications so you don't miss the breakout.
Last week, I believe, JP Morgan put that out, the debasement trade. And I think it was, someone asked me earlier today, when will Bitcoin move from like this risk-on asset to like this risk-off asset? When will it be deemed like a safety trade? And I said, I think a lot of people have already seen it like that for a while, but I think if you look at JP Morgan's announcement last week calling it the debasement trade, that maybe put the pin in it. And so what JP Morgan is basically saying is that governments will always debase their currency. They will continue to print forever. And so the trade, the obvious trade, is to leave the fiat currency and go to a hard asset. And the hard assets are gold and Bitcoin. Now, JP Morgan has been talking about Bitcoin for a long time. They put out years ago that they thought they projected Bitcoin to overtake gold. Mm-hmm. So they've been projecting that for a while. And so for them to now lump those two together and basically consider it a risk-off move, like a safety haven asset, and then you combine that with their guidance of it passing gold, then it does look way undervalued, right? So gold is, what is it, 21 trillion or so right now today. So it's about a 10x move for Bitcoin to be able to catch up to gold. And so a lot of times people want to know, like, is it too late for Bitcoin? Which I think is an interesting question, because typically you buy stocks based off of the future valuation of those stocks, but people think about Bitcoin based off the past performance, which is kind of weird. But when you look at these like forward guidance, like JP Morgan saying it's going to surpass gold, when you look at them put out this announcement last week of the debasement trade, it looks super undervalued. And I would say that for Bitcoiners specifically, and for gold people, they've understood this for a long time. Mm-hmm. And they understand that when you print more dollars, the existing dollars buy less goods and services. Mm-hmm. But most of the world still doesn't understand that basic concept, and they still think of things getting more expensive. But so anyway, for them to put that guidance out there, I think people are waking up to it. So far this month is certainly playing out that way. There's a lot of indicators that say that this could start running away pretty quickly, like trying to catch up with gold's price and stuff like that. So yeah, it's exciting. Well, there's a couple things. So number one, I would say Bitcoin specifically, we sort of have these 4-year cycles that Bitcoin's been moving in. And so it's like the end of that 4-year cycle. So it's sort of like this like parabolic move before the blow off top. I would say overall, though, I don't really believe that the 4-year cycle in Bitcoin is what most people think it is. I think it's about a 4-year global liquidity cycle, but it's also having that blow off top moment. But I would also say it's because of the annual cycle. So like it's what is it? Sell in May and go away, right? So it's like the summer is usually dead. So people are coming back after the end of the year. They're kind of making their moves, and that's why we typically see that. Now, Q4, we have October. Mm-hmm. And Q4 is historically the best time for Bitcoin. November is not. And so November is a crapshoot. November is very volatile. I just want people to be aware of that. And then December typically ends up pretty high. I'm somewhere in the middle of that, but it's different than what most people consider. So in October of 2022, I put out a YouTube video saying that there is no market crash coming, and here's why. And then December, January, I said, hey, here's what the Fed did. It's time to go back in. August of 2023, I said the bear market's canceled. December of 2023, I made a video titled Reverse Market Crash. Since that time, I think Bitcoin's up 180%, right? S&P 500's up like 80%, gold's up, 90%. So I called it a reverse market crash. So let's just first get clear on the terms. So if we think about a crash, and most people are still afraid of a crash, the doomers are out there in the crash. So what is a crash? I would call a crash when my standard of living goes down. So in 2008, we had a deflationary crash. Home prices cratered 30 to 50% across the United States. The S&P 500 crashed 50%. Gold was down. I think S&P 500 was 65%. Gold was down 30, 40%. And so we had this deflationary crash. And what happened is then businesses went out of business. People lost their job. People took new low-paying jobs. Businesses didn't do as well. And so what happened ultimately is that I had less money, so I didn't have the same quality of life I had before. That was the crash. My stock account dropped. My home account dropped. I felt poor. I lost my job. My business didn't make as much. And my lifestyle went down. My lifestyle crashed. My standard of living crashed. I couldn't buy as much vacation, as much food, as much house as I did before. Now, that's when a deflationary crash happened. But what I've been projecting, and I think what we're witnessing, is a reverse crash. And so it's a crash up and not a crash down. So the same can also result, or we can get the same result, but from a different way. So right now what we're seeing is prices running away from us. So the S&P 500 is not crashing, it's continuing to go higher.
Bitcoin's latest cycle is breaking the rules of the past, signaling that this bull run might be more strategic than speculative. Mark Moss is challenging the traditional view of retirement, arguing that saving money, living off those savings and dying with zero is a broken model. True wealth, he says, is built by owning and holding appreciating assets, not by selling them. The wealthy earn in fiat currency but quickly convert it into assets that grow over time, then leverage those assets to create cash flow without triggering taxes. Bitcoin, with its strong compounding growth potential, fits seamlessly into this strategy. Moss projects Bitcoin could reach $1 million by 2030, $14 million by 2040, and $40 million by 2050, driven by long-term monetary debasement. A $100,000 investment today, he notes, could potentially grow to $1 million in 5 to 6 years, enabling investors to borrow against it and live off that income stream tax-free, a 5-year retirement plan. Interestingly, Bitcoin's current cycle looks different from the past. Historically, its 4-year pattern has followed, having events with parabolic rallies and sharp corrections. But 18 months after the 2024 halving, there's still no blow-off top or crash, and momentum indicators like the monthly RSI remain cooler than in previous bull runs, suggesting a new dynamic may be unfolding. Let's get back to the interview.
Most people look at Bitcoin and retirement through that lens because that's all they've ever known.
Yeah.
So then the debate comes in the Bitcoin community is, well, how much Bitcoin do I need to retire then? Which is the wrong question. Again, so the primary method today is to save for retirement and then live off my savings and hopefully I die with zero, which I think is terrible. We should not do that. And why would I want to die with zero? Why wouldn't I want my heirs to start at a higher level than I had to start from?
Yeah.
So what the wealthy do is the wealthy play a different game. And the game of wealth is one where I earn fiat and I buy assets because assets are wealth. I don't sell assets for fiat currency. So when someone says, Mark, when are you going to sell your Bitcoin? I'm like, you don't even know the game that we're playing. The game is to get assets, always get assets. And what we do is we can leverage those assets. I call it, we can harvest the appreciation with debt. So rather than selling the asset and no longer having the asset that's compounding at 30 to 50% per year and then paying taxes on that, I can keep the asset but pull some of it off with debt.
Yeah.
So the real number is as long as the asset is appreciating faster than the rate of debt. So if I'm borrowing at 10% and the asset's going up at 20%, I could do that forever.
Yeah.
Forever. So the way that I've broken this down, I call it the 5-year retirement plan. I expect Bitcoin to hit $1 million by 2030.
You do?
That's about it. Yeah. $1 million by 2030, 14 million by 2040, and 40 million by 2050. I have a whole video breaking this down with the exact math as how I got to that number. Okay. The government, the CBO, Congressional Budget Office, they project out the debt, the deficit
through 50 trillion
through 2054 for the next 30 years. So you just take the rate of monetary debasement and then project that over the last decade, 2 decades, and then project that through 2054, and you can see the growth of the store value assets. So anyway, sidetracking, but $1 million by 2030. Okay, so that's about a 10x, not quite from here now. We're a little bit higher. But so if I had, let's say, $100,000 in Bitcoin. So let's say you're an average middle-aged, professional, and let's say that you've managed to save $200,000 or $300,000, right? That's not enough to retire.
No.
You're going to sell 4% of those assets. You're going to be good for $1,000 a month.
Yeah.
You're not going to live on that. But if I took, let's say I had $200,000 or $300,000, if I took 100 of that and put it into Bitcoin today, in 5 years from now, that could be 5 or 6 years from now, that could be $1 million. Now, at the rate of Bitcoin's compounded annual growth rate and harvesting with debt, I could safely pull off about 10 to 15% of that principal every year in debt. So I put 100,000 into Bitcoin today. In 5 or 6 years from now, that's $1 million. That's 5 years, 5-year retirement. I could pull out $100,000 to $150,000 of debt against the $1 million in perpetuity. Never paying taxes on the money because it's debt I'm pulling out, not income. And the asset is growing faster than the debt is accumulating. So then in 10 years from there, you owe $2-3 million, but against like 20 million in assets.
Yeah.
And then when you die and your kids are your age, they're going to owe like $20 million against like $100 million of assets, right? And so the asset will continue to grow faster than the debt. Most people in the Bitcoin space have now sort of realized Bitcoin moves in this like 4-year cycle. So we understand that there's a high and a low, and depending on where you're in the cycle, kind of what you can expect. Of course, there's volatility between that. So it's about a 4-year cycle, longer than the S&P 500, and it's more volatile. But treasury companies are even longer duration and even more volatile. What do I mean by that? A real corporate treasury is like what Strategy is today. So they have a big Bitcoin asset base, and they're creating credit and debt instruments off of the Bitcoin asset base. So far, they're the only one doing that. It's taken them 5 years to get there. So I think of the treasury companies are more like almost like a startup. It's almost like a venture capital. Now, I'm a partner in a venture fund with James Lavish and Larry Lepard. And when you think about venture, it's typically like a 7 to 10 year lockup. So most venture capital funds that would invest into Uber, Airbnb, it's like, give me your money in 10 years, I'll give you something back. Because it takes time to build out Uber or whatever, right? And so these treasury companies are like a long-term company that needs to be built like a venture capital company. Stage 1 is get enough Bitcoin. That's step 1. Now, how much Bitcoin? It depends on the company. But $1 billion, maybe 8,000, 10,000 Bitcoin. Then I can go to phase 2, which is then I can start creating credit and debt instruments, securitizing the Bitcoin. Now, as of now, as I said, only one company has gotten their MicroStrategy. MetaPlanet has announced they're going to start doing it, and Asset also announced they're going to start doing it. So now, Stripe, So now there will be 3 companies. There will be, but most of the other companies are still building. So that's number 1. There's a duration mismatch, and what happens is, a lot of Bitcoiners got into these things and said, hey, they're supposed to outperform Bitcoin. And I believe they will. I believe they'll at least 2 to 3x Bitcoin. Some good ones should do better than that, but not on a 1-for-1 daily basis.
Bitcoin appears to be entering a new phase that could reshape how the market views its long-term potential. Its current cycle is diverging from past 4-year patterns, showing steady strength rather than the typical boom and bust rhythm seen after previous halvings. Institutional interest continues to build, supported by its growing reputation as a hard asset in an era of monetary debasement. While Q4 has historically been a strong period for price action, global economic pressures like tariffs and trade tensions may bring short-term turbulence. With each having reducing supply and increasing scarcity, Bitcoin is steadily evolving from a speculative asset into a more mature, strategic store of value, positioning itself as a cornerstone in modern wealth preservation. Could Bitcoin's break from its classic 4-year cycle signal the beginning of a more mature long-term wealth era for the crypto market? Crypto moves fast. Share your thoughts in the comments, spread the word with your network, and subscribe to catch the next wave early.